Hello traders, Gary Wagner here. Just about 1 o'clock in Honolulu, 6 o'clock in New York. It is Wednesday, 3rd day of February 2021, and this is the daily report for gold and silver. Although all of the precious metals traded on the futures complex did move higher today, there seems to be a widening disparity between gold and platinum, palladium, and silver. It is the industrial component of those precious metals that have been highly supportive of today's rise in price. Whereas I think gold is in a wait-and-see pattern in terms of the fiscal stimulus plan that President Biden is presenting and hoping to get passed as is. We'll talk about that in our opening letter, and we'll talk about the key levels of technical support and resistance during our chart section, which begins now. Today, traders witnessed a variation or big difference in terms of the net gains of gold, silver, platinum, and palladium futures, with silver, platinum, and palladium having substantial gains and gold only gaining fractionally. We're looking at gold futures basis the most active April contract, which gained $1.20 in trading today, currently fixed at 1834.60. At the same time, we look at spot pricing of gold. That actually lost $3.54. It is still actively trading at $1833 and change. Traders, after yesterday's dramatic decline, we did see a fractional recovery, gold gaining $1 plus on the day. However, it must be noted that on a technical basis, we still have gold trading under all three major moving averages, the 100-day on top, the 50-day in green, and the 200-day moving average. It is also trading below the 38.2% Fibonacci retracement level. While I remain cautiously bullish long-term, on a short-term basis, we do need to see gold pricing move back above the 200-day moving average before we can get exceedingly bullish once again. For right now, we are in a holding pattern in terms of active trades and must maintain our neutral stance with no active trades in gold futures. Today, both palladium and silver did exceptionally well, with silver scoring the highest percentage gain on the day, a total of 2.09% or 55 cents, and is currently fixed at $26.95. When we look at SLV, that is currently trading up 39 cents per share. That is a net gain of 1.59%, with iShares Silver Trust currently fixed at $24.93. We continue to believe that silver will outperform gold in terms of percentage gains, but as we saw yesterday, it certainly will exceed percentage drawdowns on days like yesterday. However, unlike gold, the technical studies that we have been utilizing still remain solidly bullish. First, we do have silver above the 23% retracement, and it has not violated any of the moving averages that we follow, the 100, the 50, and the 200-day. In fact, we are still looking at the fact that we had a golden cross between the 50 and 100-day moving averages on the 18th of last month. And the other thing that we're noticing is that we have an inside trading day, and that is simply created when the market action of today's range fits within the entire range of yesterday. And in Japanese candlesticks, that is known as a bullish harami. Harami simply means pregnant in Japanese. And you would take this type of a call if you received a confirming candle on the following day. A confirming candle would be created if we saw tomorrow's action result in a higher high and a higher low than we saw today. It would also have to have closed higher than the open, in other words, be a green candle. I have drawn in what it might look like if we saw a solid confirming candle tomorrow. That would absolutely trigger a buy signal in silver. If that comes about, of course, we would send out a special trade alert to that effect. recommending that you buy at the market, we would also give you our suggestion for where to place a protective stop. For right now, we remain neutral in silver. We are bullish, but we want to see a confirmation on today's inside trading day. We are looking at a daily chart of silver futures through the eyes of a Heikin Ashi or Japanese average chart. By virtue of the fact that it is drawn by fixing the midpoint of the prior candle as the open, as we can see here, it will always lag behind. But what we would see tomorrow if we got a confirming candle through a candlestick chart is a pivotal candle in this Japanese average chart. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.